In Dartmouth, Nova Scotia, we have Mike. Hello there.
Mark, how are you doing tonight?
Very well. How are you?
Great, not bad, thanks. My question to David is with respect to Toyota. Does he feel with the continued reforms going on in the country of Japan that the company is well positioned to take advantage of the export market going forward to 2014? Appreciate your comment. Thank you, David.
Right. So, Mike, we do think that the outlook for Japan continues to be that it will get better. We think that there is some very concerted efforts going on to try and stimulate, and that the exporters should benefit. The problem is that you're dealing with an investment in a currency that is in general weakening. So unless there is a significant shift in the direction of the currency, I think that you're going to face some headwinds. We do have some investments as a firm in Japan, although we've been hedging the currency back to US dollars. And so one of the problems is going by Toyota, you're basically buying it in effectively Japanese yen. So that's an issue. If I were to buy an auto company, I'd be more likely to want to buy auto that is focused on North America and Europe, so I'd prefer to buy a Ford. But Toyota's a great company. I just don't think it's the right one in the group to focus on.
They came out today and said they sold nearly 10 million vehicles last year, number one in the world. And weakening yen is helping the sales.
Yes, that's right.
But again, so
you're buying shares. You're buying shares that ultimately, are trading the home country in Japan, and you've got a weakening yen. So I do think that they have a tailwind. I do like the auto industry. I just don't want, if I can't hedge the currency, that pure currency exposure.
And you're talking about even the ADR.
Yes,
as well.
That's right.
Yeah. Okay. Here's Jerry, who's in Vancouver. Go ahead, sir.
Hi, fellows. My question's on Manulife. Can you please, David, give me your view on Manulife? Is there much upside left? I'm basically about 5% up on what I've had it, but I've had it for a number of years, and it's been a real dog. And the dividend really is not that great on it. It's at 2.39. What's your views of looking forward? Thank you.
Well, Jerry, you live through a very deep valley.
Yeah.
Listen, we didn't own Manulife for years. We bought it over the past year. Manulife benefits in this market in a few ways. Certainly better equity markets, better return on their investment portfolio. With equity markets doing a little better, the investment business, selling wealth management, certainly is helped. Higher interest rates over the last year helped them on their bond portfolio, although I don't expect to have the same kind of tailwind this year. We think that interest rates probably stay sort of sideways over the course of the year. But if you look at it, Manulife is about one multiple point, PE multiple point more expensive than the Canadian banks, but probably will grow its earnings about twice that of the Canadian banks. So Canadian banks probably grow their earnings about 7 or 8% this year, probably 6 or 7% next year. Manulife probably can grow its earnings low teens this year and a little bit more next year. So I think that for that slightly more expensive company, you get pretty good value. So we own the stock. We own Manulife. We own Sun Life. We own AIG in the States. And really the way you want to look at these is they're big investment portfolios. And if you think markets are going to be okay, then their earnings probably will come along with it.
All right, there you go, Jerry. And next up is Peter, who's in Toronto. Go ahead, Peter.
Mark, David, happy Thursday to you.
Thank you.
Do you think it's suicidal to invest in coal industry today? And Walter, did it drop enough to invest in it, or you think it might go down further? Thank you.
So Peter, it might help to put in perspective the way that we look at the world. We've been in a pretty decent market. And when you're in a good market, you want to own stocks that are participating in the current market strength, because you only get these good markets from time to time. I would prefer, if you think Walter's a great company, and I'm not arguing that it's a good company, but I think it's in the wrong industry right now. If you were to see coal start to turn and see the shares start to behave a little bit better, you take a look. But I think right now you're basically trying to say, I'm smarter than everybody else in the market by trying to pick a bottom here. Now, based on what we see going on, we think that we are not in an emerging market cycle. We are not in a commodity cycle. We think that ended about 18 months ago. And outside of some trading rallies, I don't think you're likely to get sustained lift. So as Canadian investors, we got to remember that there's a reason why they call commodities cyclical, right? They come into and go out of favor. So at this point, I don't see any evidence that that's changing. And we would prefer to invest in the things that benefit in a weak commodity market. And those are things like I talked about earlier on, consumer, healthcare, things that benefit in a disinflationary environment.
Next up, we have Noreen, who's in Pontypool. Hi there. Hi, Noreen.
My question tonight is on international paper.
Sure.
I don't buy big time. I try to diversify. I bought it last July at 48.10. Today it closed at 47.49. This stock just seems to go up a little bit, then it drops down more than it ever went.
Yeah.
Is it something that's worthwhile holding, or is it just something to cut your loss and get out of it?
Right. Noreen, of all of the commodities, actually, we do like some of the forest stocks for a couple of reasons. First of all, on the lumber side, and this isn't on the paper side, but on the lumber side, there has been no additional capacity come to market. Of course, the pine beetle has actually helped contract supply. The industry's consolidated a little bit through the housing bust. And here we are on the other side, housing's recovering a little. The lumber companies are doing pretty well. And I would prefer to focus on the Canadian lumber companies if you're going to be in forest products, like a Canfor, which we own, or a Western Forest, which we own, which really benefit from a weakening Canadian dollar. Like every 1 penny drop in the Canadian dollar adds about $40 million in EBIT for Canfor, so that's a big win. International paper really has not been participating in this. It's a bit of a behemoth. I would prefer to stay in the lumber-focused forest products companies. I think international paper, I would move on.
The Western Forest Products at WEF. I think we have a call coming on West Fraser Timber, so we'll wait for that. Right now, we'll take a short break here with David, and we'll come back to take a look at his past picks from last January. He is out of 2 of them and still in 1. We'll find out what they are after this.